difference now? The difference between this and this. Post-acquisition profit is what? 48,000. Now, what's the next line item? Any fair value adjustment? Any fair value adjustment? Please check the additional information 1, 2. Is there anything like acquisition, evaluation of additional information 1? Please, let's read that. Additional information 1.
At the date of acquisition, the fair value of lower limited assets.
The fair value of lower limited
Assets was
fair value of the assets is what? Was
equal to their carrying amount.
okay, equal to carrying amount.
With the exception of an item of plants.
Okay, except plants. Okay.
Which had a fair value of 64 million.
Fair value of 64 million.
In excess of the carrying amount.
In excess of what? Over carrying amount. Abi? Greater than carrying amount. Is that not?
And had a remaining life of 5
So
years.
fair value is greater than, where the fair value is greater than the carrying amount, then we say this what? The valuation was surplus. Abi? So what is surplus there? Because they said fair value of that plant is greater than is excess, Abi? Higher than this kind of amount. So the surplus is still what? 64 million. Abi? Then the remaining useful life, remaining what? Useful life is what?
5 years.
5 years. 5 years. So we are going to recognize this as surplus, Abi, as our fair value adjustment. Then we'll do what? We'll spread it. Write it up for how many years? For 5 years. So let's do that now. So this is the surplus which we are going to recognize here. Fair value. We call it what? Fair value what? Adjustment, or we call it valuation surplus. So the fair value adjustment will be recognized when? Reporting date and the acquisition date. Acquisition date. So we have what? 64 here. Also have what? 64 here. Is that not? The revaluation surplus. Is there a surplus there? The surplus of 64. They said the fair value is higher than the carrying amount. Is that not? So what you will do is that you recognize that 64,000 as revaluation surplus. So you are adding it to this acquisition date and reporting date. So if you don't use the word fair value adjustment, you can use what? Evaluation surplus. Then after that, after adding it to this line, this column, then you now what? You now divide this. You divide it by 5 years. That is, you write it off for 5 years. You said the remaining useful life is what? 5 years. So another line item. So we have what? Depreciation. So the depreciation we are going to consider here is going to be what? Accumulated what? Accumulated depreciation. Accumulated what? Depreciation. So what is depreciation? We have 64. Is that not? 64 divided by what? 5 years. Now, what is the duration? The duration is what? 6 months. So we now multiply what? 6 divided by 12. So what do you have? What do you have here? 64 divided by 5 multiplied by what? 6 over 12. That would be 6.4. 6.4. So we have 6,400, Abi?
Yes, sir.
6,400 to be recognized at what? At reporting date or at consolidation date. 6.4. Don't write 6.4 here. Don't consider 6.4 at acquisition date is wrong. Do you understand now? Don't consider depreciation there. You consider depreciation here at what? Consolidation date or reporting date. In brackets. Depreciation is an extra, it's in brackets. So we have it, you post it here too. Look at it, we now post it under what? 6. We deduct it from this profit, it's affecting profits. Then any other information, we close the account. So what do we have? These are net what? Net assets. So sum of, let's get the figure here. Let's get the figure. The difference between this must give us the same as this column. So what's the value here? What's the total? Total.
3,936.
3 what?
9,600.
3,9.
3,600.
What about this? This column. Date of acquisition. Huh? 350,000.
352,000.
352,000. The difference. Right? Is it the same thing as minus this from this?
Yes.
It's the same. Alright. So this is net asset at acquisition. These are our the post acquisition profits. Any question? All right. Now let's treat this. How do we treat this? How does this fair value adjustment affect the SFP? How does it affect the SFP? So this 64,000 or 64 million will be added to PPE. So we say plus what? Plus 64 minus what? Minus depreciation 6,400. We are done with that. What's the value? What's the value? For PPE, what's the value for PPE? What's the value of PPE?
1,760,000.
This plus this plus. What?
1,760,000.
1,760,000. Okay. 1 million. Please 1 billion. Somebody should confirm the figure. Alright. So then how does it affect the P&L? How does this depreciation, how does it affect the consolidated statement of profit or loss? You treat it as an expense. This is an expense, right? You treat it as an expense in the consolidated statement of profit or loss. Is that not? Now sometimes you might be told to add it to what? Cost of sales. But when you are not told, what do you do? What do you do? You add it to where? So let's add it to admin. So let's add it to admin. 6,000. So minus 6,000. Okay, since an expense, we are adding it. Plus what? 6,004. So we can close this admin. We can close this finance. Then distribution, we can close this distribution. Then tax, close this tax. No information on tax. No information on this. So the only information that is affecting this cost of sales is the intercompany sales.